Bernard, you teased this up on April the 6th about what investors can expect. Just run us through what you think the major details are in this announcement today. Good morning, sir.
Good morning, Steve, and thanks for having me on. Look, it's a good set of results. It's a strong set of results from us this morning. I think strong earnings, as you said, but strong cash delivery. We took in about $11 billion of cash in the quarter, which is very, very strong, and that allowed us, as you say, to get our net debt down to about $33.3 billion. That's down from a peak, Steve, of $51 billion during the pandemic. So down by about $18 billion over the past 4 quarters. And that's about a year ahead of schedule. And as you say, that has allowed us now to start buybacks. We'll start buybacks in the second quarter, about $500 million. And at the same time, we made some really good strategic progress in the quarter as well as we seek to transition the company. So overall, a very strong quarter for the company.
I think we all get the message now, what you're trying to do with the company, the reimagination of BP from pure hydrocarbons to having 40% less fossil fuel production by the end of the decade. And we've seen that a lot from you, Bernard, as well. But has there been doubts from the credit rating agencies, from the investors about the cash flow, about the profits in the medium term as you get through that transition?
Well, I think there's been many questions. It's been a year of such uncertainty for the world and for the company. There have been many, many questions, of course, and that's understandable. But I think today's results really answer many of those questions. People had questions about the company's net debt. I think we're one of the few companies to drive our net debt down during the pandemic, down by $18 billion. And as I said, a year ahead of schedule. So that's in very, very good shape. We are doing buybacks in the second quarter. So I think we now look forward and see the potential to increase our distributions over the coming years, getting back to pre-pandemic levels possibly in the coming years. So I think that's very, very strong. And we're going to continue to take care of the balance sheet. We're going to continue to allocate 40% of that surplus cash to the balance sheet over this coming year. So overall, Steve, I think what it does do is it answers many of the questions that are out there and shows that it is possible to do 2 things at once. It is possible to deliver our shareholders with competitive cash returns and at the same time transition the company to a lower carbon future.
Just to confirm for many of our viewers who are investors going forward, Bernard, as well, it's all about buybacks going forward now. That dividend rebased at $5.25. We're not going to see the halcyon days of 10 cents plus again anytime soon.
Well, in terms of distributions, you may well see that over the coming years. But what you will see from us is a very, very clear, I hope, Steve, financial framework. And it starts with that resilient dividend. We want that dividend to be resilient. And it's the first call on cash. Of 5 possible uses of cash in the company, it is the first call. So investors can rely on that resilient dividend of 5.25 cents per share. And then investors can share in that upside as we take advantage of the hard work that we've done over the past 12 months on cost, the hard work that the company and the team has done around capital and capital discipline, bringing on those major projects, growing that convenience business. And with a strengthening environment, as we're seeing today, that provides the opportunity of surplus free cash. And what we've said today is that we'll dedicate 60% of any surplus free cash to buybacks, 40% of it being dedicated to the balance sheet. And that will allow distributions per share overall to rise over the coming years in a moderate to strong environment.